Yes, we can.
Good afternoon and a warm welcome to all the participants today here for the second day of the GST Gyansatra Series. I, C. Amruta Kulkarni, Vice Chairperson of the Pune branch of ICAI, welcome you all on the behalf of the entire organizing team. Today, to discuss the issues and case studies in valuation, we have with us CA Vivek Bhatt. Welcome, sir. It is indeed a pleasure to read out the profile to the participants. He will be guiding us, navigating the session for the next 2 hours based on his wide and vast experience in the field. He is a partner at ELP and part of the firm's tax practice for almost 2 decades. During his stint with the ELP and BMR, he has worked with various conglomerates advising upon the indirect tax related issues including structuring and restructuring. He has assisted various MNCs. On the litigation front, he is supporting and representing several companies on investigations carried out by the Directorate of Revenue Intelligence and DG GST Intelligence. Alongside, he is also representing various clients before the advanced ruling authorities to seek clarity on various interpretational issues like classification, applicability of GST, availability of ITC. On the customs front, he has successfully obtained orders from special valuation bench, accepting the price declared on the invoice as assessable value. He has authored various articles on diverse topics, which were published by the various tax publications and is regularly called upon to address the conferences and seminars. Prior to joining ELP, he was with BMR Associates. The next 2 hours, he will be guiding us on the various issues and case studies in valuation. So the stage is all yours. Welcome, CA Vivek Bhatt, sir.
Thank you, Amruta. Good afternoon to all. At the outset, thank you, Pune branch of WRC, for giving me an opportunity to speak on very important topic, which is valuation. In next couple of hours, my focus would be on GST valuation and the related concepts. My request to all of you, if you can be more participative, that would be easy for me per se to explain the basic concepts of valuation and what are the issues which are going on in the industry as far as valuations are concerned. Now, if you see any SEC, if they want to pay any GST on the transaction of a supplier, three most important parameters are required. One is classification, another is tax rate, and most important is valuation. On what value an SEC is supposed to pay GST as far as their supply transactions are concerned. Parameter 1, tax rate. As most of you are aware that in India there are only 5 GST rate. One is nil rate. Products which are very essential covered under 5%. Products which are very thin product are covered under 28%, and most of the products are covered under 18%. So as far as tax rates are concerned, it is not very difficult to understand which rate is applicable per se. And in order to determine the tax rate, an SEC needs to apply proper classification of goods, because 4 schedules are there, and based on the classification, applicable rates has been provided under GST provision. Having said that, even though these two parameters are easy to understand, but most important parameter which everyone in the industry is struggling is valuation. On what value an SEC is supposed to pay GST? Because if value goes on toss, your rate, your classification is fine, but even if you pay appropriate rate of GST, authorities can catch hold of your SSCs or your clients and demand respective tax along with the interest. If you see the green basket of this slide, this is overall legal provisions. Section 15 talks about transaction value. Section 15(2) talks about inclusion and exclusion with respect to the transaction value, and the rules allied as far as valuations are concerned. They they have provided, GST provisions have provided some valuation mechanism, valuation procedures which needs to be followed in order to determine a correct value for the purpose of payment of GST. So this is a very crucial aspect in order to discharge appropriate GST to the exchequer. That is the reason I would request all of you to pay an attention for next 1.5 hour, where I would like to go through the important concepts of valuation. Once we understand the concepts of valuation, we will also discuss what are the issues going on in the industry where still clarity is awaited, where still ambiguity is going on, where still litigations are pending before higher forum, and at the same time, wherever authorities are doing the audit, uh, while reviewing the transactions of most of the SSCs, they are raising the concerns as far as the valuations of the supply are concerned. So we will also understand which are the burning issues, major burning issues, not getting into integrities and each and every aspects of the issues which are going on, so that we will also come to know that how to deal with this sort of an issue, and when we are advising to our client, which of the things we should keep in mind, and which of the aspect we should consider while executing an arrangement before with the customers. So most important section, which is transaction value, section 15.1. Now, in any supply transaction, there has to be a transaction value. Transaction value has been defined under section 15.1. The value of a supply of goods or services or both shall be the transaction value, which is price actually paid or payable. Very important terminology. Price actually paid or payable for the said supply of goods or services. It means whatever you are paying, and in future whatever you are agreeing to pay, those value also needs to be included for the purpose of transaction value for the said supply of goods or services or both, where supplier and recipient of the supply are not related. What does that mean? If you are referring to section 15, then two most important parameters which we need to understand based on this per se definition provided under section 15.1. A, price actually paid or payable for supply, and B, is the supplier and recipient of the supply are not related. Very, very important, because once the supplier and recipient of the supply are related, then we need to see different valuation rules, different valuation mechanism. The reason for that is, generally authorities feel that if the parties are related, then their relationship influence the price. And if the relationship influence the price, then to that extent, GST is either less charge, and accordingly government is getting less revenue on the said transaction per se. And even if on this transaction, if the SSCs or if the GST has been paid on more value, and the supplier and recipients are related, then authorities feel that there must be some fishy transaction. The reason for that is SSCs are paying GST on more value as compared to the value which has been which is going on in the industry. You will ask me why SSCs are going to pay GST at higher rate. See, everyone, all of you must be aware that only in specific situation where the GST refund is allowed, right? If GST refund is not allowed, then how to utilize that credit? That is also the question and concern in front of the SSC. Then in that scenario, if the recipient is having higher tax liability, then supplier generally charge at higher rate, and he pass on that credit to the recipient, and recipient effectively use that credit. This sort of a question, this sort of an intention also has been raised by the authorities in the recent past. Therefore, it is not only if you are paying GST at lesser value, then only authorities are approaching the SSE. Even if you are paying GST on a higher value, then also questions has been raised before the SSE, so that there should not be any undue advantage SSE should take as far as the valuations rules are concerned. And third, most important, is price is the sole consideration for the supply, right? Now you will say, what do you mean by price is the sole consideration for the supply? In my next few slide, we'll give some examples as well, where price is not only the sole consideration. In addition to the price, the recipient pays something to the supplier. In that scenario, what would be the taxable value? So in order to come out of all this ambiguity, they have provided some provisions under section 15, and in order to support those sections, there are rules prescribed under the GST rules, which holistically, when we are advising to all of our clients, we need to read all these sections along with the rules, so that we can give proper advice to our clients. If I draw all of your attention to a green basket, these are the sections where you need to go through, and these are the rules which are allied to this section. So we have to read this section along with this rule. And even if you are reading the rule, you need to read along with the section in order to provide appropriate interpretation, in order to provide appropriate valuation whenever your clients are paying GST on the transaction of supply. If any of the above cumulative factors are not fulfilled, for example, price actually paid or payable for the supply, or supplier and recipient are, assuming for a moment, related, then we need to also refer valuations rules in order to determine the actual value on which GST should be paid. Or if price is not the sole consideration, in that scenario also we need to refer valuation rules in order to determine appropriate transaction value. Now, most important language which has been used here is the transaction value. Okay, so if the buyer and supplier are not related, then whatever would be the invoice value, that should be the transaction value, right? Because transaction value is where the transactions are undertaken by the supplier and recipient, and while completing that transaction, whatever price has been received by the supplier, that should be the transaction value. In excise era, there were a valuation assessable value concept was there, transaction value concept was there, uh, fiat ruling was there. On that, there were series of issues going went and it went up to the Supreme Court only as far as valuation, in order to resolve the valuation, if the transaction value is not the assessable value. In that scenario, there were series of judgment as well. In order to come out of all this ambiguity, they have specifically mentioned the transaction value. Now for the SSEs, it is easier for them. If the parties are not related, then they should pay GST on the transaction value. Okay, now in addition to the transaction value, section 15 also talks about some inclusions, right? I would like to draw your attention to all these inclusions, because what we have seen practically, that whenever SSEs pays GST, they pay GST on the invoice value. Generally, they ignore this inclusion part of the definition, which they needed to add while paying GST on their output side. Typical example: taxes, duties, cesses, fees, and charges, except CGST, SGST, IGST, and compensation cess. If the supplier is charging any other tax other than CGST, SGST, IGST, then in that scenario, on that value, assessees are supposed to pay GST. What does that mean? If the invoice value is 100, and in addition to that, if any taxes has been collected by the assessees, then that value should be notionally included in the value of in the invoice value, and on that GST has to be paid, so that we should be complied with section 15(2) as well. At the time of implementation of GST, the ambiguity which was going on is with respect to TCS under income tax, whether it has to be included or not included, because specific inclusion was mentioned under section 15(2), and TCS is one type of a taxes which is neither covered under CGST, SGST or IGST. Therefore, in order to comply with the provision of section 52, am I supposed to include TCS value? If you include TCS value, then there would be a unique situation. It is a cash 19 situation where if you see the TCS valuation, in that scenario, you need to include CGST, SGST as well. So there were a lot of ambiguity which was going on. Should I pay GST on TCS value, or am I not supposed to pay GST on TCS value? Uh, uh, in that respect, there were so many representations has been filed before the GST Council, and we explain it to them what is the practical difficulty. If we include CGST, SGST value, then when we are deducting TCS, we need to consider this amount of whatever GST we are paying on this transaction value. If we are including this value, then TCS value already get factored if we consider this GST amount. And when we are paying GST, if you are forcing SSC to include TCS value, then practically how we can resolve this issue? These practical difficulties SSC's GST councils have understood, and eventually, after 1 year, they had issued this circular and specifically clarified that TCS under income tax should not be included while paying GST to the on the transactions on this sort of a transaction. Wherever the SSCs have paid or included TCS value, they have claimed refund. They have applied refund for their past transactions and successfully obtained from the government. Another typical example, and which is very important to all of us to understand, that amount incurred by the recipient which supplier is liable to pay. When supplier is supplying goods or when supplier is supplying services, in that scenario, he needs to consider all of his cost factor, and after considering all these costs or factors, he need to determine its transaction value. In the event what supplier was supposed to pay, recipient agrees to pay, then in that scenario, supplier is required to include that value for the purpose of paying GST. You will say when this sort of a situation will arise, uh, we have considered some typical examples. I have considered some typical examples where industry has faced this sort of an issue and consider this value for the purpose of payment of GST. Typical example, very typical and very famous in auto and auto ancillary industries. Whenever auto guys are manufacturing any parts, these are very specific to any cars, right? And these are specifically designed for specific cars as well. In fact, different molds and dies has been manufactured for different set of segment, different set of companies who are manufacturing cars, right? Now all these OEM requires these auto components in order to manufacture car. But whatever components they are required, those are specific to their cars. So what they do, all these auto ancillaries, they provide molds and dies, right? Because molds and dies give the specific specification which by way of which they manufacture specific parts and supply it to specific OEM. Now, what we have observed in most of the auto ancillaries, that when OEM approach auto ancillaries in order to manufacture some components, and they place an order to OEMs as well, that the company may require maybe 1,000 parts for a month in order to manufacture Swift, in order to manufacture whatever car you name it, Skoda, Volkswagen. Now the auto ancillary, they are supposed to provide these components based on the specification provided by OEM. Now, in order to manufacture these parts as per their specification, this this company requires huge molds and dies, and that without that they will not able to supply these parts to OEM. Now, ideally, molds and dies are auto components are supposed to buy these molds and dies from an independent buyer, right? Because they've obtained an order from OEM only to supply the manufacturing parts, right? So, in order to manufacture parts, whatever cost is required, OEM auto ancillaries are supposed to incur on its own. But as the costs are huge, generally what happened, this OEM supplies free of cost these molds and dies to the auto components, to auto ancillaries uh, in order to manufacture these parts. Now, what generally happens, if this OEM provide free of cost molds and dies to OEM, in order to manufacture their components, they generally don't consider cost incurred with respect to these molds and dies, right? If they are not considering these molds and dies cost, then to that extent, the transaction value of auto parts gets reduced. And on that, if the value to the extent of molds and dies gets reduced, then government is getting less amount of GST as compared to if the auto guys when procure these molds and dies from third party and incur whatever cost in order to and consider those molds and dies cost in order to supply components to OEM. If you compare both the price, then the later part of the transactions where auto ancillaries procure these molds and dies independently, that cost and that value would be much higher if you compare with OEM providing free of cost molds and dies to auto components. That is but obvious as well. When we are obtaining free of cost anything from anyone, we generally don't consider that value for the purpose of our manufacturing cost. That was a huge issue even erstwhile regime as well and under GST regime as well. Post implementation of GST, these issues came up before us, that if we need to consider these molds and dies now in order to simplify the transaction, molds and dies are nothing but a capital goods in order to manufacture auto components, right? You can understand, in order to buy capital goods, there is a huge working capital involved in order to buy this product, and working capital goes if working capital is involved, then automatically interest cost or maybe depreciation cost, all this falls in place. Some of the auto ancillaries have taken this position that they will not include this value for the purpose of payment of GST, because if you see the language of the valuation, it talks about transaction value, and if the parties are unrelated, then on whatever transaction value I am paying or I am recovering from the OEM, on that we are supposed to pay GST. Having said that, if you read carefully section 15.2, where they have specifically included that amount incurred by the recipient on behalf of the supplier, that has to be included for the purpose of payment of GST. Considering the practical difficulties, the authorities again have issued a circular in 2018 and specifically provided in which of the scenario molds and dies value should be considered and which of the scenario molds and dies value should not be included. So the point which I am making here is, whenever we are advising to the client, we need to understand all the factual scenario. What are the parameters involved in the transaction? Is there anything free of cost which recipient is providing it to the supplier? Is there anything which is there any facility which recipient is providing it to the supplier? Is there any cost which recipient is incurring on behalf of the supplier? If all these factor, if you consider, if anything triggers with respect to with respect to the cost where recipient is incurring those costs, then all these costs should be included for the purpose of payment of GST. Another typical example, if in when we are doing the audit and if the client is specifically providing accommodation services, specifically providing hotel related services. Now the question arises, am I supposed to include those expenses as well for the purpose of payment of GST on my audit fees? Answer may not be yes. The reason for that is, when we are providing these services, right, we don't require this sort of an facility, right? But in the event, if the recipient or if the client is not providing this sort of other services, and if we are paying all these expenses, if we are incurring all these expenses and recovering this amount from our client, in that scenario, we are supposed to include all this value for the purpose of payment of GST. And if the recipient, if the client is incurring those expenses, in order to safeguard any interpretational issue in future, we should specifically include this sort of a clauses in our contract, in our communication, in our PO, so that there should not be any valuation issue come up in future as far as payment of GST is concerned. So this circular specifically has given two clarity. One, value of molds and dies provided by OEM not to be included to the auto component supplied, since cost of the molds and dies was not to be incurred by the auto component manufacturer. When you can say that cost is not supposed to be incurred by the auto component manufacturer, when there are specific clauses in the agreement, when there are specific arrangement provided between OEM and the auto component guys. If these clauses are missing, then 100%, note down my words, authorities are raising concerns, authorities are slapping notices to OEM and asking them to pay GST on the differential value. The downside of that is, if today, if authorities are issuing with the notices, then even if you are supposed to pay GST on that, recipients are not eligible to avail the credit. So if we are doing proper tax planning, if we are giving proper tax advice, there is nothing harm in including this sort of a value while paying GST, because all these OEMs are eligible to avail 100% of the credit. If we are taking unnecessary risk of not including this sort of a value, tomorrow, if authorities raise this sort of a concern, no OEM are going to pay your client an additional GST with respect to that. The reason for that is they are not eligible to avail the credit in future. Today, if we include this value, OEMs are eligible to avail the credit with respect to that, right? Considering that, we should be very vigilant while advising to all of our client, and while drafting a specific clauses with respect to this as well. Another typical example where recipient amount has been incurred by the recipient, whereas supplier is on behalf of the supplier, what we have seen over the period of time, that in most of the manufacturing sector, generally they require gas, and this gas is a typical arrangement where it is a continuous supply of gas is required for the purpose of generation of electricity, or for the purpose of manufacturing of their part. In order to manufacture their part, they require these industrial gases. And as you guys can understand, this if you supply these industrial gases um, not from nearby, or if there is no gas pipeline involved in this, then there is a huge leakage that has been involved in this sort of a transaction. So what generally industry follow the practices, they approach the gas supplier, they provide free of cost land, they provide all the infrastructure facility to the gas supplier. Now very important arrangement is there between the manufacturer as well as the gas supplier. They provide free of cost electricity, they provide free of cost water, they provide free of cost land in order to manufacture gas, right? Now when there is a negotiation between the manufacturer as well as the gas supplier, they generally negotiate with respect to per unit or per kg supply of gas. They don't consider this free of cost supply of electricity, water and land. Ideally, when gas supplier is manufacturing this sort of when gas supplier is manufacturing gas, that goes without saying that they would require electricity, they would require water, they would require land in order to set up their facility. Ideally they should incur all this cost, and if they should incur all this cost while determining the transaction value, as far as industrial gas is concerned, they should consider all this cost and pay GST on that value. What we have observed, that as the big manufacturing companies are providing free of cost this facility, they don't include this value. And if they don't include this value, then to that extent, GST has been paid at lesser value, right? If GST has been paid at lesser value, there is no additional benefit neither to the gas supplier nor to the recipient. Because if we advise to our client who are supplying gas supplier that they should consider notional value of electricity, water, land, in that scenario, if they pay GST on that value, the manufacturers are any which way available are eligible to avail the credit. But what we have seen, they fail to consider all this value, and effectively they pay GST at lesser value. So while giving advice to all of our clients, we can take two approach considering this circular, the clarification which has been issued in 2008 by the CBIC. Approach 1, recipient to raise tax invoice on supplier for FOC supply of electricity, water and land. Then you will say, अरे land पे तो GST है ही नहीं, then why should I pay GST on that? But if you raise tax invoice on that, gas suppliers are eligible to avail the credit. Don't specifically, no need to mention specifically that on value of land we are paying GST. Only we can very well structure this transaction stating that infrastructure provided to the gas supply, and in order to provide this infrastructure, under the infrastructure the recipient is providing electricity, water and land, and whatever may be manpower, whichever things are required. On that, this is the notional value, this is the value which they are going to charge to the gas supplier, on that pay GST. Supply to raise tax invoice on recipient for supply of gases and include this value of FOC so that they pay appropriate GST on transaction value. Approach 2, which is the circular, if you ask me, the easiest and litigation free approach is approach 1. Approach 2, if we are giving or if we are adopting approach 2, as far as our advice are concerned, we should be very vigilant we should include appropriate clauses in the contract. We should include appropriate clauses in the PO that this specific facility is the responsibility of the recipient, and they will provide free of cost to the gas supplier, and that value has been considered uh, as far as value of mm, uh, value of industrial gases are concerned, so that there should not be any valuation disputes as far as mm, uh, as far as supply of gas. Or you can, supply of gas is one of the example. You can consider any example with respect to that, where we are providing, where the recipient is providing free of cost to the supplier, and supplier was supposed to incur those expenses. This value should be included for the purpose of payment of GST. Another example is incidental expenses and amount charged for activities done at the time or before delivery. Classical example, freight charges. Classical example, loading, unloading, inspections, installation and testing, packing charges. All this value we should include for the purpose of payment of GST. Whenever we are advising to our clients, clients doesn't know what are the implications with respect to these charges. They generally give us half-hearted information to us, and because of that, these litigations, this all issue generally fall in place. But whenever we are giving advice to the client, whenever they are approaching us with respect to any sort of a transaction, we should be smart enough to ask this sort of a specific question: who is bearing packing charges? What about the inspection certification charges? Who are supposed to pay? Is there any installation and testing charges? Which third party is charging it to us? Am I supposed to incur this expenses while providing supply to my customer? If we are doing that, is there any freight charges which we are supposed to pay? Whose responsibility is to pay these freight charges? Am I supposed to deliver these goods to the customer's premises? All these factors we should consider while advising to the client, and we should note down this factor and include this value or exclude this value based on the customer to customer, client to client terms of the contracts, and advise to the client: should we include this value incidental expenses, or should we exclude these expenses while paying the GST as far as valuation of supplies are concerned. Another classic example, interest late fee penalty for delayed payment of any consideration. We have seen this in most of the cases, that whenever customer is not paying us the amount in appropriate time, then supplier generally charge interest, generally charge late fee. Per se, the perception is interest के ऊपर GST है नहीं. Whenever we are taking loan, we are paying interest to the bank. Are we paying GST? We are not paying GST. Whenever we are receiving saving bank interest, whenever we are receiving interest from any unsecured loan, are we paying GST? We are not paying GST. But in whenever we are recovering these interest charges, maybe with respect to delayed payment, maybe with respect to any other aspect, but this this interest will take different color as far as these transactions are concerned. This interest is with respect to the consideration which we are receiving from the recipient. Therefore, even if you are receiving interest at a later part of your transaction, in that scenario as well, you need to pay GST on this interest to the government. Now, there the question may arise that am I supposed to pay interest? For example, in the month of February 2023, you are supplying any goods to your customer, and they were supposed to pay the amount within 30 days. But unfortunately, maybe in the month of May, June, uh, up to June, the recipient or the customer could not able to pay the amount. But in terms of the arrangement, if the customer doesn't pay within 30 days, the supplier was supposed to recover the interest amount, maybe 18%, 24%, 15%, whatever terms of the arrangement are. And maybe later part of the month or later part of the year, July, August, whenever the amount they get recovered, they also recover the interest amount. Then the supplier, even though the transaction happens in the month of Feb, the supplier is supposed to pay GST in the month of September along with the interest because the transactions undertaken in the month of February. Okay, so we should be very careful while paying GST with respect to all these late payments as well, and include all this value for the purpose of payment of GST. Another important aspect has been considered for the at the time of implementation of GST is they have specifically included the value of subsidies directly linked to the price. Now they are excluding subsidies provided by the central or state government. When they have included this sort of a clauses in the section per se, it means there is a past behind this. There is a Supreme Court supersenotic judgment with respect to all these state incentives related benefit. I will not get into much of the details, just to brief or just to touch upon that, and the case is still pending before Supreme Court, that state authorities, Maharashtra, Gujarat, they provide incentives to the to the industry, and they promote industry to invest amount in Maharashtra, and when they invest this amount, they pay it back by way of GST refund, or in earlier scenario by way of VAT or CST refund. The weird interpretation which Supreme Court has taken, that whatever amount you are recovering or whatever amount central government or state government is providing it to the assessee, you should include that value for the purpose of payment of excise duty as well. And you won't believe, people have received this amount from state government 2 year down the line, 3 year down the line, 4 year down the line. Now, if I am paying, if I am supplying goods today, I don't have any vision how much amount I am going to receive from the state government. Obtaining refund from state or central government itself is a challenge. It's always a question mark. How can I include that value for the purpose of payment of either excise duty or for the purpose of payment of GST? Practical difficulties issue is still pending before higher forum, but while implementation of GST, in order to avoid litigation, they have specifically excluded this value, but other value we should include for the purpose of payment of GST. Okay, whichever subsidies your assessees are receiving, whichever subsidies your client are obtaining from either from state government or state government, we should ask all these questions. These are all questions which are relevant for the purpose of payment of appropriate GST. Okay, now in addition to exclusion, there are also exclusion which are provided under section 15(2). Now, whenever we are paying GST, whenever we are advising to our clients on what value they should pay GST, there are some exclusions which has been provided under section 15(2) as well. Excuse me. Another burning issue, another interpretation issue, and another practical issues which most of our clients are facing, and similarly your client must be also facing with respect to this discount. Whenever they are giving discount to their customers, for example, if the value of any product, if the value of shirt is maybe 2000 rupees, and if there is a discount on that shirt, and that discount was known either at the time of supply or before that supply transactions undertaken, then in that scenario assessee can take deduction of discount value. For example, in the shirt example, if the value of shirt is 2000 and if under some scheme supplier is providing 500 rupees of discount on that value, then in normal scenario supplier was supposed to pay GST on 2000 value. But when they are providing discount, upfront discount, before that supplier has been undertaken, that 500 rupees of discount was known, then supplier was supposed to pay GST on rupees 1500. He is not supposed to pay GST on 2000. It is very easy. You will say, why you are wasting all this time in explaining it to us. What we have seen, that even though supplier as well as recipient are aware of the discount, but that has not been reflected on the invoice. If that has not been reflected on the invoice, then to that extent deduction is a question mark. There is always a ambiguity with respect to that as well. So whenever we are advising it to the client, we should specifically mention that you should you should mention on this on the invoice itself that this much amount of discount the assessees are providing it to the customer or supplier are providing it to the customers. Now this is only one type of discount. Another discount which is post supply discount, for example trade discount, for example quantity discount, which is pre-decided as per the agreement between the supplier and recipient before the time of supply. Okay, if it is pre-decided, if it is known to both the recipient, then to that extent there is a deduction available. But for example quantity discount, right? For example, if in the year, if you sell so much of the amount of product, then you will get additional benefits, so on and so forth. These discounts are not known at the time of supply. You cannot quantify this sort of a discount at the time of original supply. Then in that scenario, the deduction may not be available to you. Okay, then the supplier was supposed to pay GST on total value, recipient is supposed to avail credit on total value. If it is known before the supplier, then supplier can issue credit note along with the GST. If they are issuing credit note along with the GST, then to that extent they are receiving, then to that extent the recipient who has availed credit on the basis of original invoice, they need to reverse that credit. Then only these transactions, you are complying with all the transaction, right? Considering this, generally my advice is there is a provision and there is a facility provided under GST law as well. Instead of issuing credit note along with the tax invoice, any which way recipient is eligible to avail full credit, you just issue commercial credit note rather than tax invoice, rather than credit note along with the tax. If you issue only commercial credit note, then there is no question of recipient to reverse the credit. There is no question of supplier to again re-avail the credit whatever GST they are paying. Okay. There are some questions with respect to this as well. With respect to subsidies received from, for my earlier slide, that subsidies directly linked to the price. For example, there is a scheme provided under the Maharashtra state government. Okay, when you invest this so much of the amount, or when you start manufacturing facilities in Maharashtra, or when you start manufacturing facilities in Chennai, when you start manufacturing facilities in state, different states have provided different benefit. Okay, and all these benefits are linked to central. All these benefits are linked to payment of GST, right? Now, once you pay the GST amount, This amount they generally give it back to you over the period of 8 years, 9 years, 5 years, 6 years, depending upon the state incentives provided by the respective government. When they provide this benefit to the industries who had invested this amount, authorities are of the view that this is the additional consideration they have received from the government. Okay. Now, if they have received this additional consideration, this is linked with the supply. If it is linked with the supply, the assessees are supposed to pay GST on this value, right? There is a huge ambiguity. There is a huge litigations which are going on with respect to this per se. According to us, no need to pay GST on this, because whatever amount you are receiving from the government, you are not receiving it from the from the person to whom you have sold these goods. This is an independent benefit which you received from the central or state government. A. B. Why I have received this government? Why I have received this benefit? This I have received this benefit because I have generated employment in the country. I have generated employment in the state, right? To that extent, I am paying government GST to the respective state as well. And in order to promote this industry, authorities have provided this benefit to all the assessees. And whatever amount we are receiving, this is not linked with, this is whatsoever is not correlation with my supply. This is linked with my capex. Okay, people are not very if this sort of benefits, if you are not providing it to the industry, then industry is hesitant to invest so much of the amount. And how the employment is going to generate, how the backward areas are going to develop, right? Because these benefits are provided to the assessee where they are investing this amount to the lower backward area or less backward area, and based upon that they have provided this benefit, considering that we should not include this value for the purpose of payment of GST. Okay. Now, discount, we have already discussed that this amount should be excluded, provided there has to be it has to be known at the time of supply, when the assessees or when the clients are undertaking this transaction. If they are not aware of this discount, then the deduction to that extent is not available to the uh, to the assessees. This is the turnover discount which we have already discussed in detail. Now, another aspect of the provisions are valuation rules, right? When I am supposed to refer valuation rules, the blanket principle is whatever transaction value is there, on that I am supposed to pay GST. Plus, I need to include all this value, be it incidental expenses, be it interest expenses. I also need to check whether any amount has been incurred by the recipient which was supposed to be paid by the supplier, or is there any incentives which I have received, not received, or if it is directly linked with the price of the goods or not. If I considered all this, did I consider the discount factor as well? If I am aware of the discount before I undertake that supply transaction, if I am aware of the discount value, did I mention on my invoice value? If I mention on the invoice value, to that extent I am eligible to avail the deduction. If I am not mentioning on the invoice value, or if I am not aware of the discount quantification, then to that extent the deduction is not available. If I considered all this factor, then more or less you are complying with the valuation mechanism. But in addition to this, there are valuation rules which has been provided under the law. This which we have discussed right now, this is when price is not the sole consideration, and supplier and recipients are not related. In that scenario, transaction value plays a very, very important role. But ambiguity and interpretation issues come or started when supplier and recipients are related. When supplier and recipients are related, then in terms of the assessees, in terms of the authorities, whenever there are related party, the price is generally influenced by the relationships. So it is our responsibility to establish that even though recipient as well as the supplier, they are related, but price has not been influenced because of the relationship. So this is the additional responsibility lies on the supplier of the goods, so that that they should justify that the GST paid on the transaction value has not been influenced by any relationship, and whatever prices are provided uh, is the sole consideration, and there is no additional consideration which has been received by the supplier of goods, and on that appropriate GST has been paid. So in order to provide a guidelines to the SSC, in order to provide guidelines to all of your clients, they have provided this valuation mechanism. So which is the rule which which cover the valuation mechanism, and which we need to read carefully before we advise to all of our client that if the relationship is between if the transaction is between related party, then which of the parameters they should also consider while payment of GST. Rule 27 talks about value of supply, where uh, wholly uh, consideration is not wholly in money. Then in that scenario, what would be the open market value of such supply? They have also defined what is the open market value. If open market value is not available, then the sum total of the consideration in money and any such further amount in money as is equivalent to the consideration not in money. Okay, for example, uh, the recipient is providing consideration in money, plus they also provide some facility, they also provide some product to the supplier, then to that extent those value also needs to be considered for the purpose of payment of GST. If value is not determinable, I mean to say, if open market value is not available, if open market value is not available, and the even though the sum total of consideration in money may be available, but how to determine the consideration which is not in money? Then what would be the mechanism which assessee needs to be follow? Then assessee needs to follow value of supply of goods or services of a like kind or quality. You won't believe, uh, in my presentation or in today's session, my coverage is only to the extent of GST, but I also advise to the client with respect to customs as well. In my past couple of decades of experience, most of the issues under customs are with respect to valuation. And even though they have laid down this rule that you need to consider the value of supply of kind, a supply of goods or services of like kind or quality. For the sake of discussion, assuming for a moment, we can we can get the value of goods of kind or similar goods or similar quality of goods. There also there is a lot of ambiguity. What do you mean by similar quality of goods or similar quality of similar kind of goods? But can you imagine that how will you determine the similar kind of services or similar quality of services? Is it practically possible to determine this sort of a value? All of you 165 participants are there, right? You are charging audit fees to all of your clients. Now the fees charged by A Will it be similar to fees charged by B? 100% no. Even though both of you are providing similar sort of services, but there is a hell lot of a difference with respect to quality, hell lot of a difference with respect to approach, hell lot of a difference with respect to scope of services. How will I determine the value of services? Simple example, if a transaction, whether it is liable for GST or whether it is liable, whether it is not liable for GST, few of my friends will say, will provide these services at free of cost. I may not provide these services at free of cost. I may charge maybe 75,000 in order to determine, in order to provide an opinion to my client. Then how will I determine, even if you are not charging anything from your clients, are you supposed to pay GST at on 75,000 of value? Practically impossible. Answer is no, and therefore lot of litigation is involved around this valuation per se with respect to goods as well as with respect to services. If any of the determinative factor is not possible, then they have provided that as per rule 30 or rule 31 chronologically. This chronologically is also very important word which we need to understand over the period of time, over the period of next 30 minutes, which we will discuss as far as valuations are concerned. Now, just an example that when the consideration is not wholly in money. If supplier is providing phone to the recipient, right? And we can see this classic example with respect to old batteries as well, with respect to maybe old phones as well. Whenever you buy online phone, whenever you go to any phone stores and you give your old phone and buy a new phone, and you pay effectively the less amount to the supplier. So on what value am I supposed to pay GST? Assuming for a moment in my example that value of new phone is 40, but recipient is giving 4,000 uh, uh, against its old value, and if they are providing old phone, then effective payment is 36,000, right? So the value of old phone is 4,000 rupees. Issue is at two level. Supplier is receiving only 36,000 rupees. On what value he should collect GST? Is he supposed to collect 36,000 rupees on 36,000 rupees? Because transaction value is 36,000, even though the parties are not related. Answer is not yes. He is supposed to collect GST on 40,000, even though he is receiving value amount only 36,000 of rupees from the recipient, right? B, recipient is selling its good at 4,000 of rupees. Assuming for a moment that recipient, the threshold limit, he is crossing threshold limit of 20 lakhs, so on and so forth. Right? But is he not supposed to charge GST on 4,000? Answer is yes. Similar logic applies to batteries as well. Another example with respect to laptop. When you go and buy new laptop, you are exchanging maybe old desktop. On what value supplier is supposed to pay GST? So whenever we are advising to the client, whenever we are whenever we are advising to the client, we should consider, we should collate all these important facts from the client, and then only we should advise that on what value they are supposed to pay GST. The simple example and simple understanding is whatever transaction value, whatever amount you are receiving, you are supposed to pay GST on that. But if we consider all this fact, if we understand all this fact, then 100% your advice would be different rather than giving blanket answers to all of our client. Okay. Now, with this, I think there are other aspects as well as far as my presentation is concerned. But I think we should take a small bio break, maybe for 5-10 minutes, and we should resume by 6:15, so that another very important case studies which I wanted to cover, and throw some highlights that where the authorities, how authorities are taking an interpretation, and at the same time there are some issues which are still open-ended, and there are no clear black and white answer to this valuation rules are concerned. Okay, thank you so much.
I request all the participants to stay tuned on the same link itself. We will be resuming in 5-7 minutes.
Can we start?
Yeah, everyone is as it is logged in. Yes.
Okay. So I think that was much needed, because a lot of valuation concept uh, has been loaded on you. So I thought ki bio was is much required. Now, in quickly we'll understand what are the rules, and thereafter what are the case studies, what are the cases which are going on practically, as far as industry is concerned. Now, as I mentioned, that open market value, they have defined that open market value would be the full value of money to obtain such supply at the same time in a transaction between unrelated parties. Very important, that between unrelated parties, you just cannot take open market value with the related party transaction. I can give you a classic example, that whenever employer recovers the amount from the employee, right? And prior to GST, service tax was payable on this amount. Generally, employer pays the amount to the employee, but there are some expenses where employer recovers the amount, like canteen, telephone, so on and so forth. Now, the question was, SSCs, are they supposed to pay GST on this? If they are supposed to pay GST on that value, what would be the value? And if you see, whatever amount they are recovering equal amount from all the employees. And therefore, there is no unrelated person's open market value is available in the market. Okay, therefore I'm saying that between transaction between unrelated persons, we need to consider that open market value rather than between related person. Further, comparable facilities provided by other companies may not be taken as a basis. Like, kind, or quality. In terms of explanation provided after Rule 35, the expression like, kind, quality would mean any other supply made under similar circumstances. Series of judgment. Volvo India, New Holland. For example, if I am buying 1,000 quantity, and if you are buying 800 quantity, this cannot be said as like, kind, or quality. Okay, because quantity discount would fall in, factor will come into picture. uh, uh, Another example is, if a dealer is buying from the manufacturer, or if the customer is buying from the manufacturer, then there is a different level field, because manufacturer is supplying it to the dealer is supplying it to the customer, right? And if customer is directly supplying, buying it from the manufacturer, then this cannot be same kind or quality of the goods. So all this factor would play a very important role while determining the valuation in case of a related person. If the value is not determined open market value or like, kind, or quality, then the rule 30 is cost plus 10% markup, or rule 31, that is reasonable means. Authorities or provisions have tried to lay down provisions as simple as possible, but still there are some open-ended issues which are still there, which needs to be addressed over the period of time. There is one proviso, there are two proviso to rule 28, right? First proviso to rule 28, and another proviso, second proviso to rule 28. Both the proviso are as equally important as the rules which has been provided under rule 28, be it A, B, or C. I will read it for you. As far as first proviso is concerned, provided that, it means whatever the value you are considering, provided that where the goods are intended for further supply as such by the recipient, the value shall at the option of the supplier be an amount equal to 90% of the price charged for the supply of goods of like kind or quality by the recipient to his customer, not being a related person. For example, as you are aware that even with the same pan but different state, you need to take a different registration, right? Even though you are related, or you are supplying it to the dealer and dealer in turn supplying it to the customer, right? Now if you are related, then what should be the value I am supposed to take? If you are not related, then first proviso to rule 28 says that it is an option to the SSE that to the extent of 90% of the value. For example, value of car is 10 lakh of rupees, and if he is supplying it to the dealer, then to the extent of 90% he can consider the value as a transaction value, and on that they are supposed to pay GST. Another proviso which is very important and crux of the valuation, if you ask me, uh, and litigations are going on this second proviso to rule 28 itself, provided further that where the recipient is eligible for full input tax credit. See, I am reading it again and I am requesting all of you to read it carefully along with me, because this is very important proviso, because this proviso gives shelter to all your valuation. Whatever value you are considering, with this shelter you can come out of the litigation or ambiguity from the authorities. Provided further that where the recipient is eligible for full input tax credit, the value declared in the invoice shall be deemed to be the open market value of the goods or services. What does that mean? That if two parties are related, okay, forget about open market value, forget about like kind or quality or value. Even if I make some mistakes with respect to adopting this value, and if the recipient of the goods or recipient of the services is eligible to avail full input tax credit, this full input tax credit is also having an interpretation issue. Is it with respect to the invoice I am raising on the recipient, or is it overall I need to see the approach that recipient is eligible to avail full input tax credit, or there are some activities which recipient is undertaking, for example sale of mutual fund, for example sale of land, and on that he is supposed to reverse some proportionate credit. This is an interpretation which is going on in the industry. Okay, now if the recipient is eligible to avail full input tax credit, assuming for a moment, then whatever value I am charging, be it 100 rupees, be it 1000 rupees, be it 10,000 rupees, that values they assess authorities needs to be considered for the purpose of the transaction value. That is the deemed transaction value. The reason for that is, as I mentioned in my earlier slide as well, it is always better to consider all this inclusion and pay GST, because the any which way the recipient is eligible to avail the input tax credit and there is no revenue loss, there is no additional cost to the recipient as well if he is eligible to avail 100% of the credit. With the same analogy, they have given this proviso to Rule 28. They said that if the recipient is eligible to avail the credit, then whatever value you are considering, that would be considered as transaction value. Even though there is a rule proviso to Rule 28, authorities are still raising concern. They are saying that this full input tax credit, you need to interpret it as if recipient in a whole year is not engaged in any exempt activity. He is not undertaking any exempt activity where he is not supposed to pay GST. It is not with respect to qua invoice. It is not with respect to qua supply. It is with respect to holistically, we need to see that whether recipient is eligible to avail input tax credit or not. Considering that this second proviso plays a very important role while dealing with the audit which are going on which are undertaken by GST authorities, be it DGCI, be it DRI, be it GST wings, wherever they are raising this concern, you can take this shelter as far as valuation of the transactions are concerned. Rule 29, in order to just have a full coverage, 28 and proviso to Rule 28.1 and Rule 29 is more or less similar. The only differential is Rule 29 specifically covers when the transaction is through an agent, and Rule 28 proviso is silent about whether transaction is through agent or not. If it is through agent, then to the extent of 90%, you can consider as a transaction value for the purpose of payment of GST. If any of the Rule 28A, B, C, or proviso to Rule 28, if it is not applicable in your case, then Rule 30 or Rule 31 will play an important role. You need to follow consequentially later on these rules. Consequentially, you need to follow this rule and then determine the value for the purpose of payment of GST. Rule 30, value of goods, value of supply of goods or services or both based on cost. This is a classic rule which was applicable even in the excise era as well. Wherever uh, manufacturer used to supply manufacture or accessible goods to their another plant, then they used to charge 100%, 110% of the cost of production. Generally, in typical language, it's cash 4 plus 10%, right? If you are not able to determine the value of open market value, if you are not value to determine like kind or quality value, uh, then in that scenario, you need to apply Rule 30, which talks about 110% of the cost of production. On that, you are supposed to pay GST. If that is also not possible, for example, cost of acquisition, cost of manufacture, cost of production, if some of the factors where you are not able to determine the value, then your basis per se is not correct. In that scenario, they have provided Rule 31, which is residual method and which talks about a reasonable means. And now reasonable means they have vaguely drafted. Nowhere they have mentioned what do you mean by reasonable means. And if you are going under Rule 31, be prepared, advise your client that of course the litigation is definitely going to flow. Okay. Now, this is as far as valuation sections are concerned, valuation rules are concerned. When when the transaction is between related party, what factor you need to consider? When the transaction is between unrelated party, what factors we need to consider? Be it Rule 30, be it Rule 31, be it Rule proviso to Rule 28. See, I am again and again emphasizing. I am going back on this slide because these rules plays a very important role when we discuss all these case studies. Okay. Be it open market value, be it like kind or quality, all these rules you need to consider while deciding the valuation for sure. Whenever authorities are raising concern, they will first raise a demand stating that the open market value for your goods is so and so, and you are paying GST on so and so. So you had paid GST at less value, and therefore you are supposed to pay GST at differential value along with the interest and penal consequences. So while advising it to the client, we need to ask all these questions. Is there any open market value available for your goods? If it is yes, uh, what are the factors which you have considered while deciding open market value? If it is no, which are the like kind or quality of the goods or similar competitors which they are supplying? If it there also, if we are getting answer yes, then we need to consider which are the other factors like quantity, quality, brand, no brand. Are you selling through dealer? Are you selling not through dealer? Is there any additional discount, not discount? All these factors we need to ask to our client before we advise anything with respect to valuation as far as payment of GST is concerned. Now, specific case studies, I have considered only those which are very interesting and which are the burning issues going on in the industry and authorities are raising concern as far as these valuations issues are concerned. Most important is corporate guarantee between related person. We have seen this not only in real estate, other than real estate as well, that one company is providing if it's a group of company, for example, XYZ group is there. I will not name it, be it Tata, be it Birla, uh, be it anyone, okay? And they have various companies under their umbrella, right? And we have seen in so many cases that one company is giving guarantee on behalf of another company if they obtain a loan from bank or if they obtain loan from any financial institution. The company which is very strong in terms of balance sheet, in terms of name, they generally give a guarantee, and on behalf of another company, they are obtaining loan from the banks. Now, you guys will ask, "Okay, which services I am giving, right?" Effectively, one company is providing corporate guarantee services to another company. What do you mean by corporate guarantee? Corporate guarantee is nothing but a legal promise by the guarantor to repay the debt of the debtor in the event the debtor is unable to perform its obligation. It means it is having some value, be it intangible, but 100% there is some value, because if the other person is not providing any guarantee, then bank is not going to provide that loan to the respective company. It is a mode of ownership contribution given to compensate for the inadequacies of the financial position of the company. If you see from the person who is providing loan as well, how much comfort he is getting, right? Is it not a service? Of course it is a service. Okay. And when it comes to a related party, even if you are not charging any consideration, then all these valuation rules comes into picture. Be it open market value, be it like kind or kind of value, be it 110% cost of construction, cost of services value, all these rules. Therefore, I had spent so much of time in order to explain all this concept per se, so that you understand the gravity of the issues which are going on in the industry. Now, what we have seen, crores of rupees of bank guarantee has been provided by one company to another company. Not only by one company to another company. In real estate, what we have seen, that as it is a promoter driven companies, uh, in real estate, other than real estate also, wherever there are promoter driven company, promoters are providing guarantee on behalf of the company as well, okay, so that the company obtain proper loan and they run their business smoothly, right? And these loans are in the range of 1,000 crores of rupees. Now, can you imagine what would be the GST implication on this per se? There is a huge dispute, there is a huge litigation going on this. So whenever we are advising to all our client, these are not balance sheet item. These are not financial. If you see balance sheet, the person who is providing corporate guarantee may not able to see from the balance sheet how much amount of corporate guarantee he is providing it to XYZ company. But when we are advising to all of our client, we should be very, very vigilant and advise to our client that on this transaction, even if you are providing any corporate guarantee on that, you are supposed to pay GST. Now, what are the issues going on? Issue one, as the debtor company does not receive any actual consideration, it is difficult to determine the value on which GST is to be paid. 1,000 crores of corporate guarantee am I paying? Am I providing? Am I supposed to pay GST on that value? Very illogical, very irrational. Even though recipient is eligible to avail the credit, am I supposed to pay GST on that value? Now you will understand why I was emphasizing on proviso to Rule 28. Then, irrespective of the value, right? If I go back to that slide where what it says, the value declared in the invoice. Whatever value I am going to charge, that should be treated as deemed open market value for the purpose of goods and services. Okay. Now, question number one is what should be the value? Now, value may be determined as per the rule 10 TD 2A of safe harbor rules, because in terms of whenever there is a question of interest comes into picture, this safe harbor rules falls in place or comes into picture, which is generally in the range of 0.13% to 1%. You won't believe, in couple of our client, authorities have forced SSEs to pay GST on in the range of 0.75% to 1%. आप 1000 करोड़ का 1% भी लगा लो और उसके ऊपर 18% भी लगा लो, हाउ मच वर्किंग कैपिटल इम्पैक्ट इज देयर, प्लस इंटरेस्ट प्लस पेनल कॉन्सिक्वेंसेस आर देयर बिकॉज यू आर नॉट पेइंग suo moto. Assuming for a moment I am paying GST on this value, but all of us are from financial background, right? This corporate guarantee is not for 1 year. It is, the tenure is till the time the loan gets repaid. So it is over the period of 10 years, 15 years, 5 years, depending upon terms and conditions of loans. So am I supposed to pay GST on year basis? Huge questions to be asked. And there's no black and white answers in front of us. Okay. Value determinable based on the loan amount and not benefit derived. Can you believe that? What service I am providing? Assuming for a moment, if people are paying 0.5%, uh, on what value am I supposed to pay GST? The benefit which has been received by the recipient, am I supposed to determine that value, or am I having my own value of services, on that I am supposed to pay GST? Assuming for a moment, if you are advising to any of your client, and if he is earning profit in the range of crores of rupees, are you supposed to pay GST on the benefit received by your client? Answer is absolutely no, right? So these are the huge questions which are in front of us. On what value am I supposed to pay? Year on year basis, am I supposed to pay or not? Therefore, proviso to rule 28 plays a very, very important role. Okay. And if you see, there are some companies, they have taken a little bit aggressive stand. They are saying that it is not per se a service. It is nothing but it is mere obligation as a stewardship measure to safeguard its legal and financial interests. That's it. A practice which is long standing and as such do not involve any supply of services or other. It was not there prior to implementation of GST. But post implementation of GST, this is the view which industry is taking, this is the view which consultants are taking, and accordingly people are paying GST. So whenever in any of your client case, corporate guarantee comes into picture, you need to be ultra careful. You need to see how much corporate guarantee, and even if I need to pay year and on year basis, am I supposed to pay GST on diminishing value basis, or am I supposed to pay on fixed charges basis? All this question needs to be addressed urgently by the GST Council. Okay, representations have been filed even on these aspects, but still, still clarity is awaited. Another typical examples: use of trademarks, use of logos by related person. Assuming for a moment, for our discussion only, Tata Group of companies or Reliance Group of companies, right? You can see they are using their logos or their names, right, across their group. Is it not an intangible value which other groups are also using with respect to logos or trademarks? As these transactions are between related party, am I not supposed to pay GST on this? Someone has raised hand. Can I take your concerns maybe once I finish my slides, or should we discuss right away?
Maybe later on we can add the people, those who have raised hand for interaction after the session discussion, if you are convenient. We can do
Yeah,
it later. Yeah.
yeah, that is much better because otherwise the link
I will
will not.
unmute them and then they can directly ask the question in that case.
No problem.
Yeah.
Or otherwise they can post their question even in chat box.
Either ways, yeah.
Okay. So now coming back to this use of logos, trademarks. First of all, is it a service? Answer may be yes. The reason for that is whosoever is using those logos, for example, Tata Cummins, Tata Steel, Tata BlueScope. There are so many Tata's companies, right? Tata Sky. They're using Tata and it is having a brand value. And because of that, they are generating business. So maybe a holding Tata company uh, which is registered under the holding company, the brand name or trademark is registered under the holding company, and thereafter they are giving rights to other companies in order to use that. Is it not a service provided by holding company to other group companies? A. Answer may be yes. And another typical example, you can see that a company like Voltas, a Tata Enterprise, where the name per se it is not coming in the name. So can you compare both this company at one level, or you need to compare this company at two different level? Because in first leg of example where Tata name is coming upfront, in another leg of transaction the Tata name is coming at a later part of the enterprise, right? So all these factors need to be considered as far as valuations are concerned. As I mentioned, these are the related party transaction. Even if there is no consideration, this transaction is treated as supply, and and on that GST needs to be paid. Okay, important points to be considered. Now, if I go back to the rules, if I follow these rules 28 A, B, where they have mentioned that open market value I needs to consider. Okay, what should be the open market value? A. B. If I can I take a shelter of proviso to Rule 28 and just charge maybe a lakh rupees of invoice to all of my group company, and take second proviso to Rule 28 where I am eligible to avail full ITC. Question is still in front of all of us. Or am I supposed to, as there is no open market value available with respect to this because these are related party transaction, and if you see it open market value talks about the transaction has to be between unrelated party. So should I go to Rule 30 or Rule 31 which talks about cost of the services plus 10% or any other reasonable means? If I go back to that rule, then then my GST liability goes down drastically. Okay, or am I supposed to take any valuation certificate from any third party experts? So all these factors needs to be considered while providing advice to our client, and at the time of payment of GST as well, we should consider all this factor and accordingly advise all our clients for the purpose of payment of GST. What we have seen in few of the example, that basis some turnover of the companies, they charge some logo fee or percentage of the turnover, uh, some logo or trademark fees to the respective companies. Is that the basis? There is no valuation whatsoever mechanism has been provided under the law. Another very typical burning issue is corporate office is located in one state, another branch or other companies are located in another states. Corporate offices are as you most of you are aware that they generally undertake functions of HR, finance, legal, business development, IT on behalf of all the plants in one of in few of our clients. Plants are as high as 28, 30, 40 plants located across the states. Okay, now whatever expenses they are incurring here at head office, are they supposed to do cross charge to the respective plants? Corporate office, key managerial persons are sitting at corporate office, be it CFO, be it CEO, be it tax heads, be it finance head. Uh, they are providing salaries to all these companies, but these personals on behalf of corporate office, they are providing services to all the plants, all the respective offices. Authorities are taking the position that even though employer-employee transactions are not supposed are out of the purview of GST. For example, if you are receiving salary from the employer, you are not supposed to pay GST on that. Whatever salary you are giving it to this key managerial personnel, what authorities are saying that effectively these personals are not providing any services. Corporate office is providing services to the respective branches, respective plants, respective group companies, be it with respect to finance, be it with respect to payroll processing, be it with respect to legal, be it with respect to HR, and therefore corporate office is supposed to raise one lump sum invoice to all the respective branches and pay appropriate GST to all the respective states. You will find there are weird situation that there are some marketing offices, there are no output liability there, but considering this sort of an interpretation, SSEs and companies are paying GST on their on this sort of an activity, but unfortunately maybe branch office or maybe marketing office, as there are no output activity from their location, they are supposed to receive effectively this credit goes in their input side, but they are not able to utilize that. So effectively, if you see from the overall company's perspective, these are all cost as such for the respective locations are concerned. But another issue which is going on with respect to this is on what value I am supposed to charge to respective branches. Is corporate office is providing similar sort of services to third parties? Of course not. Is there any open market value available with us? The value adopted by XYZ company may not be applicable to the value adopted by ABC company. Okay. Then I need to consider cost of services. Which are all the costs I should consider? All these questions are in front of us, which has to be addressed properly, which needs to be advised in an appropriate manner to all of our client. Otherwise they will be in soup, they will be in mess, because authorities have started doing the audit and there is a huge revenue pressure on them. You won't believe, in a couple of weeks back, in fact last week only, I had attended one of the hearing. On when I was attending the hearing, I just saw on the right hand side they have their own targets, that this much amount of target is there, this much amount of target amount we have collected, and this is still to achieve in next 30-45 days. So all this interpretation they are taking and forcing companies to pay GST on this. Another typical example with respect to valuation is whenever the group companies which are located outside India and they have subsidiaries in India, if they are receiving any services from outside India, be it from overseas group companies or be it from branch offices, uh, typically what we have seen in software industries where this sort of a transaction generally happens, even if it is not a software industry, many companies are taking services from outside India, be it consultancy, be it marketing services. When they pay this amount, as most of you deals with income tax, you know that there is a TDS applicable on this sort of a transaction. Now on what value I am supposed to pay GST? I am not talking about TCS. TCS, they have specifically issued the clarification. But when I am paying the amount to the overseas company, and I presume that most of you, all of you are aware that whenever the entity who is providing the services located outside India, the to the entity who is located in India, the person who is receiving the services, it's his liability to pay GST on under the reverse charge mechanism. Okay. Now in this sort of a transaction, what value am I supposed to take? Am I supposed to take value of 100, or am I supposed to take 100 plus 10% of TDS for the purpose of payment of GST? There is one of the service tax case law as well with respect to TVS motor, wherein it has been held that when TDS amount has been borne by the assessee and only the consideration for the services as agreed by the parties has been paid to the service provider, the same cannot be included in the taxable value for determining the service tax liability. So whenever there is a contract, whenever there is a communication between these two parties, we need to include all these clauses in the arrangement. Otherwise, to the extent of 10%, you are paying GST at a lesser value, and tomorrow authorities will definitely raise concern on this. A. B. Question arises that any which way I am eligible to avail 100% of the credit. Then can I take a shelter of proviso to Rule 28? Issue here is proviso to Rule 28. Is it applicable to RCM mechanism as well, where I am paying GST under reverse charge mechanism, not tested in the past, right? But if the obligation lies with the supplier that he is supposed to pay GST or TDS on this sort of a transaction, then while paying for the purpose of payment of GST, he should consider 100 plus 11. On 111, he should pay GST and avail credit. Okay, and not to take any aggressive position of paying GST on 100 rupees of value. So the point which I am making is, these are the valuation issue which are going on in the industry. Very minutely we need to see when we are advising to all of our clients. Another issue which is going on in the industry is with respect to export related transaction. Most of the exports are to the group company, right? Whenever it is going to a group company, as it is an export, there are allied benefit applicable with respect to export of transaction, be it with export of goods or be it with export of services. So whenever you are adopting any mechanism, authorities are going to raise question mark with respect to that valuation. The reason for that is there is a refund available with respect to export. There are duty drawback provided under the Customs Act. There are road tax benefit which has been provided under the foreign trade policy. There is an export obligation provided under EPCG advance as well as advanced license. So there are so many allied issues with respect to valuation of export of goods as well. Considering that, we should be ultra careful while advising to the client as far as valuations are concerned. Very important and typical issue which you will not find in day-to-day transaction: valuation in case of free of cost supply. What we have seen that generally when supplier is giving free of cost to any of the customer, the purpose for providing free of cost is he want to penetrate the market, right? If you see schedule 1 transaction, which talks about, irrespective of whether it is a related party or not, permanent transfer or disposal of business asset, right? Then when you are supplying free of cost to any of the customer, it is you are supplying goods comes under inventory comes under asset, right? So is it not a permanent transfer or disposal of business asset? If it is, then am I not supposed to pay GST? If I am supposed to pay GST, on what value I am supposed to pay GST? Am I supposed to pay on 120? Am I supposed to pay on 150? Very important to understand that if I pay GST on 150, on a pessimistic view, customer B is not eligible to avail the credit because he is not paying any amount to me as 2A 3B mismatch, as all of you are aware of that. 180 days issue, all of you are aware of that. A. And B, if he is not eligible to avail the credit and if he is not giving any amount to me, then am I not paying GST on total value, on a higher value? So, in addition to that, I am not getting into ITC reversal and so forth because that is not my domain for today's discussion. But my question to all of you is, on what value they are supposed to pay if you are considering 120 or 150, whatever you are considering. Whenever we are giving advice to the client, we should also understand that GST on this sort of a transaction is going from your own pocket. Okay, and it is not only stop here. You are penetrating the market. There is an intangible benefit aligned to this. So what are the factors I should consider for the purpose of valuation? Or should I just go and consider only cost of my goods plus 10%? Very, very important pointers to understand and to discuss before we advise anything to all of our clients. SRA transaction, whosoever are dealing with real estate, whenever there are SRA transaction, developers are generally providing a rehab building. There is no open market value available to the developer for the purpose of payment of GST. Notification 3 talks about that you need to take an independent value which is sold to a similar apartment. As such, you are not selling it to any third party, therefore there is no open market value available to you. So should I consider cost of construction plus 10% or should I consider a municipal valuation? Question needs to be asked. There is no black and white answer to this as well, and here we cannot take shelter of proviso to rule 28, 28A. Nothing is going to happen. We need to take a calculative risk, practical approach while providing a solution to the client, because rule 27A, B, C, D, all these things are not applicable. D you can take. If you take D, authority will say you please consider municipal valuation. If you consider municipal valuation, then you are paying GST on the higher value, and in case of rehab related activity, you are not receiving any amount from the from the flat owners, as that is the arrangement between the rehab related contracts. Another important issue, when you are I have already discussed that when you are charging interest on supplementary invoice or debit note, am I supposed to pay GST on that or not? If you are supposed to pay GST and if you are recovering interest on interest, am I supposed to pay interest or not? Last few case studies, renting of immovable property, you have seen that wherever the immovable property has been rented, for example, all this big commercial building where the landowner is providing um, offices on lease basis, and along with that they're also recovering electricity charges. Okay, now question arises, when they are charging rental amount, are they supposed to include value of electricity as well for the purpose of payment of GST? Is it a composite supply? Here there are 2 3 questions. Is it a composite supply? Is it a mixed supply? Or the issue of valuation per se is there, that am I supposed to include electricity and water charges even in the rent value and pay GST and charge GST to the respective company? Okay, there are contrary ruling with respect to that as well. We need to consider, we need to insert appropriate clauses as well. But at the same time, there are some player in the industry who are taking little bit aggressive position, stating that electricity is nothing but it's a pure agency services which we are providing. Okay, now if you are adopting this sort of a methodology, then there are allied issues with respect to that. There are 8 conditions which has been prescribed as far as pure agent is concerned. There has to be a contractual arrangement between recipient who is incurring this sort of an expenses. Um, the recipient does not own, pure agent should not own any interest with respect to goods or services. We need to consider all these factors when we are advising to the client. If they fall under pure agent, then there is no need to include value of electricity while charging rent. If you are not falling under the definition of pure agent, then 100% you need to include that value of electricity, because effectively it's a composite supply A, and even if it is not a composite supply, you are recovering that amount from XYZ companies, and on that it is advisable to pay GST rather than taking an aggressive position. The reason for that is most of the companies are eligible to avail the credit. Okay, considering that there are so many ambiguity, so many issues with respect to valuations, and there are no open-ended answers to this. What industries are taking the practices? What approach they are adopting? What we are advising to the most of our companies as far as these issues are concerned? As you are aware that same issues are with customs as well, and now the valuation issues are with GST, have already been started. Under customs, with respect to related party, they have there is a special valuation bench, okay, which generally deals with valuation related aspect. At the discretion of the customs authority, they generally ask all the relevant documents, and they provide you the value on that you are supposed to pay GST. It is exactly other way around. Under GST, there is no discretion provided to the authorities. It is suo moto. We need to go and approach AR authorities, okay, where they can throw some right with respect to valuation. But most of you are aware how GST authorities, AR authorities are approaching as far as issues are concerned. Having said that, if there is an ambiguity, it is advisable that we should approach AR so that there should be clarity with respect to valuation. Under GST, there is an increased onus on the SSC for the purpose of determining appropriate value for discharging GST liability. All of you are aware that if the onus is on assessee, effectively onus is on consultant. So it is our responsibility whenever we are advising to the all of our clients, we should be ultra careful and we should highlight all this risk as well as exposures, and how to mitigate if possible those exposures in order to avoid any further litigation as far as GST is concerned. Last on this slide is what we need to specifically do. We need to have a specific clauses, terms to be entered in the contract agreement. These are the checkpoints which we should consider before we give any advice to the client. Maintain backup documentation. Whenever we are adopting any valuation, we should have a backup documentation, backup communication, because at the time of audit, definitely they are going to raise this concern. Cautious application of valuation rules. When we are adopting second proviso to Rule 28, when should we adopt that provision? When we should not adopt that provision? We should be ultra careful while providing advice to the client. If required, we can also obtain certificate from third party. If we keep all this before any authorities approach us, trust my word, your life, your client's life will be much easier as compared to if you don't adopt any of this methodology and just go ahead and pay GST with respect to the transaction of supply. And last, if we are not getting into all this aspect, still we have an option of approaching AR if authorities have not raised concern. Because if authorities raise concern, then window of advanced ruling is also not open. If they have not yet approached, post GST, it's like very helpful for the SSCs as well, because prior to GST the condition was before undertaking the transaction you needed to approach to the advanced ruling. Now post GST, even if your transaction has been undertaken, you still believe that there can be an evaluation issue may come up in future, you can approach advanced ruling, get certainty which is binding on you as well as the authorities. They can't raise concern in terms of provision, and at least inform our clients so that there should not be any surprises with respect to valuation. This is all with respect to valuation as well as current issues which are going on in the industries. Thank you so much for your patience hearing. It is always pleasure talking to you, and sorry for taking 5 minutes extra, because the topic was so vast, and there are so many valuation issues which are going on in the industry, which I thought we should at least touch upon before we advise to our client. Thank you so much.
Thank you. Thanks a lot, Vivek, for your exhaustive session on valuation. Very important practicing point of view and also industry point of view. Really appreciate the way you have covered real estate and all the sectors where valuation is in dispute. Normally, we follow section 15, but the other aspects of valuation which we should cover, you have rightly highlighted during your session, where the topic is so exhaustive. You have covered in 2 hours. Thanks a lot, Vivek. Thanks a lot.
Thank you so much for providing this opportunity. And I would prefer this sort of a session to have a physical session rather than virtual, because it's very difficult for people like us, without seeing any facial expression, without knowing what issues people are facing. It's very difficult, to be honest with you. It's like motivating ourselves just to explain it to the people. Having said that, people had attended very patiently. Thank you so much, all the participants. We can discuss this, whatever issues you have offline, or you can send me across any of on my email ID as well.
Thank you.
Definitely, you have rightly mentioned that this type of session should be physical. But considering this is the first series of our GST of this year, to just reach out to the maximum people, maximum members, we have made it virtual. But definitely, we will declare this type of series same in physical mode shortly.
Thank you, Rajesh.
Thank you, Rajesh, for the valedictory remarks. I also thank our speaker for the day for explaining the complex provisions in such a wonderful way. It was really exhaustive presentation, explaining the nitty-gritties involved in the practical situation. I also take this opportunity to thank the participants for the overwhelming response. The chat box is really running with all the compliments for the time which you have taken for such wonderful session, Vivek ji. Thank you so much. I thank the branch office team for the technical support as well. Tomorrow again we meet for the day 3 of this GST Gyansatra series, and the participants have requested for the presentation. So with your permission, if it is convenient, we can have that. So few participants have raised your hand. So with your permission, can I unmute them so that can be discussed?
Yes, we can quickly, so that we can also address their concern.
Suvarna Gokhale madam has raised her hand. Madam, I have requested you to please unmute. You can please ask your query. Madam, is it the hand raised by mistake, or otherwise you can please put your query in the chat box. Okay. Suvarna madam. Okay, it was by mistake. No problem. Thank you so much. Thank you. Thank you, Rajesh ji. Thank you, Vivek ji.
I am just writing my details. If you have entered, oh shit, it's wrongly Vivek Burj. You can either send me an email or you can call me. We can very well discuss any of your concern and resolve the issues with respect to valuation. Thank you so much. It is always pleasure talking to you all. Thank you.
Thank you for the time. Yeah.
Thanks a lot, sir. Well covered. Thank you, sir.
Thank you. Bye.
Thank you. Bye.